The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Got a slight problem here today, folks. I got some type of an allergy. I just started sneezing a few minutes ago, and I don't know how long I'm going to last without sneezing, but when it hits you, it hits you. I've posted the charts for the dollar index. Let's try it again, Larry. It's for the DAX, the 4-hour chart that we usually look at. And as you can see, we've had a nice little top form there, backed off a little bit. We've also had a situation here in the FTSE that we've been watching for quite some time where we made a very large ABCD pattern up there, and it's completed a small ABCD pattern. Now, this is the real key to this market now, folks, because if that FTSE fails at this D level that we just completed about 2 hours ago, we should be we'll be heading down, you know, more and more. By the way, I wanted to mention to you two things. First of all, one thing that one of our folks in the den shared with us, and that is something that's going on. Let me see if I can get this in here. I put it up here in Hong Kong. It's from Business Insider. It's an architect that has made a house out of a concrete sewer drain, and it's basically I think it's between 100 and 200 square feet. But considering that if you have a 600 square foot apartment in Hong Kong, that's going to go for about $1.8 million, if you can believe that. I mean, that's just absolutely, you know, unbelievable. But that's what's happening over there. Yeah, that's probably what they are, David. They're probably hamster tubes. You're right, but they are actually, you know, for one person that doesn't, you know, move around much, I guess it'd be okay. But for a family, it certainly couldn't be done. But it's very, very tough over there. And if you've ever traveled to Hong Kong, which is a wonderful place to go and a great place to vacation because things are relatively cheap compared to the rest of the world. Food is certainly inexpensive, and travel there is extremely inexpensive. You can get all over the whole town for about $6 or $7 on the tubes and the beautiful old double-decker buses that they brought from the UK that are still functioning all the time. And trains are everywhere, so it's real easy for that. Anyway, you know, take a look at that because, you know, real estate over there, like some parts of the world, is incredibly expensive. The same thing in the UK. You can run into places that are these old stable houses that they used to put the horses in many years ago. They've been converted into condominiums now. They run about 2,500 to 3,000 square feet, and they run anywhere from $3 to $5 million. And this was a stable, so we'll watch it. I wanted to give a heads up here because of the work that David White did for TFNN with his setups that he has for his art of the trading with Tom, because I want to show you how accurate. And he sends these out, you know, as they're happening. This happens to be one for China Huchai International. I imagine it's for industrial goods. That's what it says right here. It's a New York Stock Exchange listed chart. As you can see here, we've completed a beautiful butterfly pattern, a bearish one right there. It's also completed a perfect ABCD pattern. That's everything you could ask for. And not only that, but you have a really nice doji there on that particular stock. So you wouldn't have to risk more than about 50 cents above the high of yesterday. So that would be about 28.50. So you're risking less than $1. So that's the main thing is, you know, it's really interesting to see that he can do these ahead of time. And you get them in the email right before the markets open. So you have plenty of time to put the orders in. And they're done extremely well. And it covers a whole lot of them. They go through thousands of them, and that's something that we can't do. I spend most of my time, of course, on futures and on the, hold on one second, please. futures and the and foreign exchange. Those are the ones that are, the ones that are most interesting, to me. But there's others that are interesting too. Now we've had some big things happen this week. Main thing, of course, is that break in the U.S. dollar that we're going to cover at the half-hour break. We're going to be looking at listening to our friend Dale Pinkert from Forex Stop Hunters. If you remember, he was on about 2 months ago talking about the U.S. dollar getting down to right near that 88 level, and we hit 88.40 in the U.S. dollar. So that's a really important one, and I'll bring this up. So we want to look at this. To me, is the most important thing on the week. If you had to ask me a question, this would be it right here, is the fact that we made that 61% retracement in the U.S. dollar on the weekly basis. That's 61% from the 2014 low, and it's exactly 50% from the 2011 low. Both they come in at both exactly the same price, at 89.50, and the low was 89.20, I believe, and we're trading at 89 and change right now. So this is a really important. Now you notice that there's a much larger target down there at 82.80. There's no, they could very easily do that, but this is a really key level that we must watch, because we might get a very, shallow rally over the last 6 or 7 weeks, like we did, in around September and October, and then we broke down again. So it's really important in here, because it's not amount of money that you have to make, it's the amount of money that you have at risk. And some of these positions in the euro, and especially the British pound, because the British pound made the price objective that we were looking at. That came in at that 78% level at 140. I'll put it up here. I believe we have it up here. Yeah, you can see it up here at the top here. Just a second. You'll be able to see it at the 143 and change level. And it had a really 200 pip break yesterday. It's come back a little bit, but it still made those levels. Also, the Australian dollar did not get any higher than the double top that we were talking about, and the buy on that was at 75.10, and we're trading above 80 now. So that's another one that looks like it's ready to have some type of a double top in here. We'll cover gold when we come back from this first break here to see what's going on. And we also want to cover, we owe a big debt of gratitude for our friend Mr. Z in the room, and also from our good friend Rich Anderson from Anderson Capital Management. We were looking at Feb cattle down there around the 17 level, and as you can see, had an 8-day run, stopping right at the 61% retracement yesterday, and immediately broke 3 cents a pound from 126 down to 124 and change. So, and there's a cattle on feed report today, folks, so you don't want to be messing with these, especially February cattle, because it's into delivery. You want to be looking at April cattle. But I wanted to show you the chart because, a couple of weeks ago when we were looking at that down at that 61% level, it did have the possibility of making a pretty nice move, and it certainly has done that. But now it's in a corrective stage, and this cattle on feed report will make a big difference. So I'll be right back. Live every day in an attitude of gratitude, and may God bless. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at this Dow Jones Utilities Index because as we ended last week, we were talking of the fact that we were right at that 61% retracement, and we are getting a nice little 5-day rally here, and that's what we thought might happen with notes and bonds because we broke down below those key levels and didn't collapse right away, so they're still having a little bit of a bounce, but longer term, these look extremely bearish. That's the bottom line. I just these interest rates, no matter how you look at it, look, and the whole world, I guess, is beginning to think that this is something that is going to be happening. I don't think it'll have much effect on stocks, at least not from the very beginning, because the ebullience in the stock market is at an all-time high. I mean, my gosh, even everybody in the whole world is looking at it. So it's going to be, very, very important to watch. Let's take a quick look here at this gold market because we looked at this GLD. We'll bring this up here a little bit because we've had a little bit of a sell-off here, and then we want to take a hold on this a second here. I've got a 1 second here. It'll only take me a second here to get rid of this. Hold on. I've got to be able to do something here quickly, and then you'll be able to see where we are here in the GLD. What we'd like to see now in the gold market is we had a high of 1368. So if we take a $34 correction, that's going to take us down to around 1334 to 1332, somewhere in that ballpark. And yesterday's low was at 1341. So that's, it's very interesting to see that this is what's happening. And, we've got to be able to say that we're able to wait for that. That's the main thing, that's the real key to this. You have to wait and be patient. You got to be like a doctor and have patience. So That's the key thing, to keep looking around. Now, someone asked me a really interesting question by email last night, and I had not thought about it very much, but they asked me what was the single best exercise that I ever did, to learn these patterns. And I'll tell you the story. It was 30 some years ago, back in '85, I believe. Howard Arrington and his brother John from Ensign came down from Idaho Falls down to Pismo Beach to actually, watch me trade, because they were going to start Ensign and they wanted to see the type of tools that I used. I can't even remember the software program that I was using at the time, but it was just basically a charting program. We didn't have any of the fancy stuff of, patterns of ABCDs or butterflies or Gartleys or I didn't even know what the butterfly was. I didn't get that until 1988 when I met Bryce Gilmore. But I traded with them on a Monday. They came down to spend 2 days with me, and they ended up staying the whole week. I had the most incredible trading week I've ever had in the history of my life. I don't know if it because they were there, whatever it was, but I didn't have any losses, and I was just, I was in the zone, as Mark Douglas would say, and they thought I did that every day, and I had to try to convince them that that doesn't happen, which is certainly the truth. But it was just one of those periods where you were just in tune with the market. And so they started to build these tools for me, the Pesavento patterns, the ABCD patterns, and of course they had the Gartley pattern, because I'd been using that since 1974. And so that was built in, and then later on they put the butterfly in and the 3-drive pattern. All of these, were put in there. But in the Ensign program, they've got a function there that is really amazing. It's called the playback method. In other words, you can play back markets going back several years, and they have the data is right in there. So all you have to do is download the data into the program. It takes just a few seconds, and then you can pull up a chart for the E-mini S&P and then go back to, let's say, 2014 on April the 17th, and you can watch it trade, and it gives you the ability to trade it at the regular speed, 2 times, 5 times, 10 times, or 20 times speed. And if you're going 20 times speed, you can get a lot of trades in and actually look at them, put your patterns on, your retracement numbers, and see where you are. Then you hit the pause button, and then you can say, okay, what would I do here? And then you hit the resume, and it would go on and tell you whether you're going to be doing it right or not. And that's how I did a lot of that to really try to prove some of these patterns, because I had plenty of time on my hands, and that's really what I did. I still do it occasionally, but I always recommend to people to do that. And it's only, $50 a month, so it's not too bad. Of course, if you buy the data from eSignal, it's a whole lot more, but just the plain Ensign charting package, which includes all Forex, by the way, because Forex data is free, it's in there, and you could do that. So if you're interested in learning how to do patterns, I'd suggest you do that. That's ensignsoftware.com. But that's one of the things that was really a big change for me in these markets, and I've always remembered that. Now, I've had a request here to take a look at the emerging markets. I wanted to we talked about this actually when it was happening. This is the emerging markets, and if you'll notice around that August period, you'll notice that we had, oh my goodness, hold on one second, please. If you notice that period that I marked in the box there where we went sideways after hitting the 78% level, when we broke out of that box to the upside with those really powerful days that were happening in there, this was certainly suggesting that we were going to go a lot higher. And then you can see as you look at this on the far right-hand side, as it starts to go higher, it starts to make the ABCD patterns. And of course, a couple of weeks ago, 2 weeks ago, we hit that spot where it exploded to the upside, and then had the vertical move to the upside. But the key to this is the fact that after that 78% level was hit, it stayed there for 2 weeks, actually 2.5 weeks, without breaking down. And boy, I'll tell you, folks, when you work with these numbers, they usually work right away, or there's something wrong. So you certainly want to be, be very, very careful when you have a signal with all the ratios and patterns coming together, and they don't work because, boy, they go the other way. And that's, you don't want to stand in front of that freight train. That's very important to do that. It's not about the amount of money that you can make. It's about a money that you don't lose. And that's the key. In referring to that, I'm actually helping my good friend Tom Hugard. He's doing some expert witnessing over in the UK, and he had a case that he asked me about. And the question is how do you differentiate between a professional trader and a neophyte trader, somebody new? Well, there's no universities for it. You don't get a degree. So the only way you can do it is by three methods. First of all, the experience of the trader. How much time does he devote for his trading? How many trades does he do? Okay, those are the things that usually will determine between a professional. Also, the amount of money in the account will also be the same. But the one thing that you don't factor into this is the fact of whether the person is successful or not, because even a professional trader can have periods when he's not doing well. That happens to everyone. And when, you just have to realize that that's happened. Trading is like breathing. You have to be able to, take a little pain as you have your pneumonia or whatever it is. But, when it turns pretty good. I know a lot of people, and Dan will agree with me on that, because we all go through periods where, the markets don't do what we think they're supposed to do. And that happens more often than not. So you've got to be careful. So 877-927-6648. Stay tuned for Dale Pinkert of StopHunters.com, ForexStopHunters.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're with our good friend Dale Pinkert from ForexStopHunters.com. Dale, are you there?
I am, Larry. Happy New Year to you,
Hey,
my
Happy New
trading
Year to
warrior
you.
brother.
Hey, listen, I want to congratulate you because about 2 months ago you were on our show here, and we're talking about the dollar index getting down to the below the 89 level, and that has been pretty much spot on. Has been the low. So
Yes.
just like the restaurant business, what's the next thing on the menu?
Yeah, people want to know. I think the major point to make, and this was really a tutorial on not putting a lot of emphasis on COT reports because it was back, I think, December 20th. The euro was under 120, dollar index 92-ish, and we had record longs in the euro by small specs and large specs. Commercials were short. And congratulations, the little guy won. So,
Yes.
The commercials have deeper pockets, and we have achieved target levels. I had a lot of confluence at that 88.5 level. We actually bounced off it yesterday. But I want to stress to people in their trading that just because you reach a price objective for your trades, like the downside being 88.5, does not mean that you automatically reverse. It means take profits and then let the market begin to develop. And I think that over the next few weeks, we're going to put in some type of base. There still could be higher levels. In the euro, we could go to 126, even 6.5, which would be 61.8 back. And there's a major weekly channel line, downtrend line up there. So, but I think the easy money has been made in cable. That's pound dollar and euro. And now we're going to enter some type of distribution phase of this dollar move. So, but I think it could run and do some work after a move like this. It takes time to turn a battleship around.
It sure does. Now, we have a question from one of our listeners about the COT, which is a Commitment of Traders report, because, a lot of these folks trade the actual Forex cross rates. They don't use the CME, vehicles, which are very good for the smaller trader. As long as you have 50 contracts, or less, you're okay in there. But, some folks like bankers and places like that, large corporations where they do hedges, they're working in the actual Forex market where we don't get those figures. We never know where they are because most of those Forex banks take the other side of the trade. And what has been your experience with the Commitment of Traders for the Merc? Has it been okay? I mean, does it do a pretty good job?
It is, but you still have to pay attention to your own work and price. And, I'm a technician. So I also believe that sometimes when people are promoting something too much, like record net longs of small specs in euro, that it's too obvious just to take that as a contrarian signal or trade. And go with your charts, Larry. You're a great technician. And use those areas instead of a piece of information like COT. It should be a tool, but not the whole. It shouldn't be your whole basis for taking a trade. It's just another tool.
I know, because the volume that we see on the Merc is, less than 1% that what we see in the euro when we're, looking at it. I had an interesting experience. A few years ago, I was over for Nomura Securities over in London doing an analysis for them, and I went into their foreign currency trading room, and Dale, there were 300 traders in there. And they've been there since about 6 in the morning, and they were doing 500 and 1,000 lots like it was a one lot. It was really a huge operation.
It's the hugest market, Larry. I mean, the
$8 trillion
bond
a day,
market,
they say. Yeah.
Yeah, bond market dwarfs all equity bourses and exchanges, and currency markets dwarf all bond markets. So that's really the bailiwick that I think all other markets spin around, that fulcrum, or what would you call it, linchpin, which is the dollar.
Okay, now what markets do you trade most often, Dale, in the foreign exchange?
Well, a lot of people have been trading the crosses, the yen, The yen used to be risk on, and when yields were going up, U.S. dollar yen would weaken, but instead it's been strengthening, and so the pound, euro yen, Aussie yen is a great risk barometer as well, and a lot of the yen crosses look pretty negative. In fact, the yen itself, the way it's paired in cash effect is U.S. dollar yen, so it's been going down, which means the yen continues to strengthen, and I think that's going to continue.
Okay, we have another question, and that is regarding how are the spreads on some of these things like the Aussie yen and some of these others? Is it tight spread?
Yeah, they're tight spreads. It's when you get into exotics like the Turkish currency or some of the more exotic currencies, the zloty, but they're pretty tight, a few pips at most brokers. I also, before we go to break, want to touch on crude. That was something else we talked about late December, that I felt with a weaker dollar we'd get one more push up in crude. And here's another example where the commercials were short before this last $6 run. I was expecting to move, I was talking 63, so it overshot my objective, but I think what happened yesterday in crude was significant, and now we're going to enter a corrective period in crude. And then maybe we could talk about indexes after the break.
Okay, since we're on the crude oil, I'm not sure, did we hit 60? I think we hit $66 a barrel, didn't we, yesterday?
We did.
And we so what type of a correction would you be looking for?
I think that we could get a fairly decent one back towards 55.
Wow, that's a decent one.
Yeah. Well, there are a lot of bears that are calling this whole thing in crude just a bear market rally, but I have some concerns about geo-risk with Iran later in the year, and I'd be a big buyer on a pullback to 55, and it's just overdone now, and commercials weren't building record short positions, the largest ever record for them. They're more short crude now than they were at 140. So I think that the hedgers will get bailed out of this position and take it down under 60 bucks.
Okay, one of the things that I'd like to talk to you about when we get back from this break, which will be coming up in just about a minute or less, is about what you mentioned about the rand. Were you talking? Is that referring to the South African rand?
No, I'm talking about the country Iran. I think
Iran. Okay. I got it. Okay.
I think there's a possibility of some type of conflict. So.
They've been doing that for 3,000 years.
Yeah. So it would just be another walk in the park. But if there's any damage to infrastructure out of the Persian Gulf, any of those countries, which would happen in some type of hot conflict, then I think we could be looking at $100 crude, $80 crude. I'm bullish.
$100 crude? Boy, that would put a damper on inflation for sure.
Yeah, the Fed would have to. I don't know if they'd probably do QE with $100 crude instead of tight.
Yeah. Hey, listen, stay with us, Dale. We got Dale Pinker from ForexStopHunters.com. We'll be right back after this break. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back. We're talking with Dale Pinkert from ForexStopHunters.com. Dale, before you get to the stock indices, because I know you do some futures in that part too, do you do much in the gold market?
Yes, Larry, and gold's threatening a weekly breakout. I'd be a buyer of any break in gold. I think we're going to make a move up towards 1,500 sometime this year, maybe even 1,550. So I like the gold. It's been moving sideways for a long time. The miners have been underperforming, but perhaps they begin to play some catch-up. So very constructive on gold.
Yeah, the gold chart, you know, we have that double top up here, and if it can get we've actually took it out by a couple of dollars and then backed off because we really haven't had any. This is the biggest correction we've had these last 2 days. Has been $24 ever since we started back at 12.38. That's just an amazing run.
Yeah, so I think it has legs. I'd be a buyer. Do your fib work and be a buyer on that. And the catalyst might be what I see happening under the surface in equities. Last time I was on with you, I said I was waiting for a move in the S&Ps up towards 2770 or so. We've extended that move, but my preferred chart was a Russell. I'm buying TZA. That's an ETF on IWM, and if you notice, it's not making new highs with the Dow. It's not making new highs with the S&P, and even NASDAQ is beginning to struggle. And one of the darlings of NASDAQ is Tesla, and Tesla, with the NASDAQ going into a parabola, has not made a new high. In fact, it looks like a failing rally to me. Also, there's been some accumulation going on in the staples, utilities, REITs, which are kind of a safety trade, people moving into more defensive positions. So I think that we're almost there. We could be there. Maybe the S&Ps make a new high, but the Russell is my preferred short, which is ironic because the tax package was supposed to be more constructive for domestic corporations than for international corporations. So it's interesting. You look at the Russell today, and we're about unchanged to lower on the week with what everything else is doing. So I'm a big believer in shorting the relative weakness.
That could be a weekly reversal in the Russell if it does that after making a higher high and then closing lower. That would be a very negative sign.
One other thing. Only one. That's the only one, and that's why it's the preferred short for me. So I'm looking forward towards something you'll like, the lunar eclipse next week. I think there could be some decent reversals into, I believe it's the 31st. So I also think that what's happening to the market when we do get this correction will not be or may not be economic related. Like, you know, everyone knows the Fed's going to tighten in March. There's a traditional thing, Larry, a February break that used to happen in commodities every year, was pretty cyclical. But it's my belief that if people think that this move in the market was the quote-unquote Trump rally, and with Mueller's investigation beginning to head towards the Oval Office, towards a possible some type of interview with Donald Trump, if there's any thought of his presidency being in jeopardy, I think it's going to be political that could drive this correction in the market and a flight towards safety. So that's what I think is going to be the catalyst. You know, the news that broke last night, Mueller knows that he wanted to fire him in June if we know about it. And so it's going to be interesting to see how this unfolds over the next couple months. But the Russell, to me, I have a target all the way down around towards if we get through 152, where we could trade 134. So that's still a big trade from here.
Yeah, that's just a 10% correction, which isn't really very much at all. That's for sure.
Maybe that's just the first leg.
Yeah. I remember when Clinton was having trouble back in when he was president back in the 90s. You know, the stock market kept going up, even though he was under the gun quite a bit, and actually was impeached. But you know, the market didn't react very much. You know, you got to be careful here, Dale, because you know the guy that steps in there is Pence, and he's from Indiana. That's my state. You don't want to mess with those Indiana boys.
Well, maybe this is more of an analog to Nixon.
Oh yeah, that would really be something. Yeah, that could be.
So,
that's for sure.
There's a difference between lying about an affair and possibly not being truthful with the FBI.
Wow. That's really cool. Anyway, how about the S&P? What is your feeling between the S&P and the Dow here?
Maybe there's another 30 handles higher. We could go to 880, but the S&P as well will suffer. I believe that we're going to get this correction in the S&P, but you know, we could have one more push. I don't think we're any more than 3 days away from into the eclipse. Might be a great time if we're making new highs in the S&Ps to take a I want to hear the ice crack trade and short the S&P up there.
Okay, that sounds really cool. Okay, we have one other question, and that is, we don't know whether you follow this or not, but since you've got the interest of the group here, any feeling on the grain markets here and how it could be related to a weak dollar?
Yeah, I like the grains. They've been weaker than the metals. It's mainly been base metals, but you know, we are in a La Nina year. That does lead to weather markets during the summer in the Midwest. Chinese have been stockpiling wheat big time, and I think that buying breaks in the grains is the right way to go.
One of our listeners is asking, he's from Park City, Utah, so he's a high roller. Where would you sell the S&P here, and how much would you risk, Dale?
Okay, let me just pull the S&P chart up here quickly. I'd look at a move between 28.70 and 28.80 and risk 20 handles. Looking for an eventual break down to about at least 2,700, 2,650.
Okay, and finally, this relates to the foreign exchange markets a great deal, and that is interest rates, the bonds and the notes. Any feeling on that on a longer term?
Yeah, we had a breakout over 262, although I think that we're getting close to where yields may peak and get some type of pullback towards 2.5. But to me, the trend looks higher in rates, and I think eventually we're going to see a 3% 10-year or higher.
Yeah, that could very easily, because remember, we used to be at 4 and 5% regularly all the time when the old people used to get their money from the treasuries, but that doesn't happen anymore for sure. Hey, listen, Dale, we're winding up here. Now, how would the folks reach you? It's forexstophunters.com?
That's my Twitter handle, at forexstophunter. And I host a free room for www.forexanalytics.com. And you could join us every day at 8 a.m. Eastern Time, and we cover currencies and indices, metals, oil, the whole gamut. We pay attention to everything, Larry.
Hey, that's great. Dale Pinkert, God bless you. Happy New Year, and we'll have you on again soon, my friend.
Thank you, Larry. And
thank you,
to all
Dale.
your listeners, bye-bye.
Bye-bye.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we've got a caller from Kalamazoo, Michigan. Kevin, are you there?
Yes, I am, Larry. How are you?
I am good, my friend. I posted the chart of XLU. I don't know what it is, but it's probably related to interest rates.
It's a utility ETF, and I was looking at a weekly for many years. It looks like it's at an oversold, but you know, it's not just a technical trade for me. I'm looking for a place to put some capital for more of a long term.
Well, it's very simple here. You'll notice the chart that you had a beautiful 3-drive pattern that occurred between May and November. You stopped exactly at the 61% retracement 2 weeks ago. You've had a little bit of a rally. The only thing I would mention, Kevin, if this gets below 49 and a half, I would be really skeptical of it. So be really careful in here because, you know, you could get a big spike in interest rates as a surprise, and you don't want to get married to a position.
Okay.
So keep focused on how much you have to risk.
Yeah, the utility sector is really sensitive to a rise in interest rates, and is what you're saying.
Yeah, that's what I would be watching. So below 49.50, we're trading at 50.93 right now. If we drop about 1.5 points from here, I would not want to be long utilities. And we saw the same thing in the utility index that I put into the room this morning, that we hit the exact 61% retracement and had a pretty good rally. So as long as we can stay above this last week's highs or lows in all these, we look pretty good. But if we go below those, especially after a small 2-week rally here, that would really be negative. So just protect yourself, because, you know, these central bankers can, you know, do some nasty things sometimes. So they haven't lately, but they could be changing. You just don't know.
Right. Yeah. Well, I always use a stop, and I appreciate your thoughts on that, Larry, a lot.
Good. As long as you use a stop, you're going to be just fine, my friend, you know, because this is all based on probabilities, not certainty. And thanks for calling in, Kevin, and Happy New Year to you.
Same to you, Larry. Thank you. Take care now.
You bet. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.